Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
A few weeks later, same picture. But by this time now, if you've got calls, you can see them shriveling up in front of you, and they're losing all their time, and of course they've lost their volatility already. Finally, after many, many weeks, at the end of the month, we're actually able to rally and head back up towards those prior highs. So that means we probably finished all the sell orders here, and now we're going to go higher and look for more sell orders. But if you look at it on a daily chart, which is a picture here from 215, you could see the origin of the big drop actually started at around 78.50, and we had a tremendous drop down here. And then we came back up to this 78 level, and look at how many days we spent trying to push through here. Definitely people willing to pay higher and higher prices for dollars, but still plenty of willing sellers at this price. So that's why you want to get down to the daily chart too to see what the picture looks like. Okay. We finally did break above here now, and we actually gapped up to 80, so we got very, very close to the old highs on 223. So now the old resistance line here should become new support. And if you're in this trade at this point and you break that 76 line or you break these pivot lows, you're probably going to head back lower because there's still plenty of sellers up here. A lot of that has to do with what happens now with the dollar index fighting this resistance level on the other chart. But so far, that old resistance, new support line is still producing a bounce here. So if you're in good shape. You can probably get up to the prior highs first, and we'll see what the dollar index does, and we'll keep an eye on that closely. Okay. When we talked about the Swiss franc back in the beginning of July, or actually, July, the end of July, beginning of August, we were actually inside here making something called a bull flag. Some people call them pennants too. Again, don't get hung up on it. The only reason I call this a flag is because to the left of my flag is a bull flag pole. It's the big move out of here. And if you look at it, it looks like a flag. And what's really happening here is anybody that bought that breakout is taking partial profits because that's the only way they're going to lock in the gain from the breakout itself. So here's your two possible entries at this point. You can either buy a breakout above the upper part of the flag, which is what most people do, or you can buy a test of the lower line of the flag if you want less risk on that trade. Either one can work or fail, but when you're planning your trades, that's all trading is. You can't make the market do what you want it to do. You can only plan and then react. We got that lower line test, and we also got the breakout after that, so either entry would have been good. And notice I said with a target of 108, right up here at 108, we had a level where we went sideways for a period right before we sold off. So again, once I see this, I'm watching that for a possible supply level. So we came across from the 108 area, and we started to go sideways again, so we slowed down the ascent. But eventually we rallied through there, and we made a trend continuation pattern, which we call the ascending triangle. So it took a few days for this to play out. We got rid of all the sellers at the lower price level. We gapped up and we went higher. Okay, so now we find some resistance up at these levels around 112 or so at this point. You can't see it here, but if you look really close, you're going to see that 112 level, that 110 level, and we actually did, again, have another one of those novice gaps. Because there's the gap candle, and then two candles later, we managed to crush ourselves all the way back down to 106. So again, it's another one of those currencies that had a gap here, which the professionals were waiting. And then they actually were able to push prices all the way back down to this 106 area on the next couple of weeks after that. It's hard to see on this chart, but you'll see the little gap candle here, and then you'll see the two candles that actually came down to 106 and tested that support. So another one of those professional gaps. Okay. In November, I noticed that we had a large 2-week retracement in September to a low of 107. The 112 put hedge was removed. In other words, to protect myself, we wanted to make sure we hedged the position, so we wanted to use puts. Again, when you see these moves like this, almost straight up, you're looking for protection. Okay. And again, we were saying now the 116 put, we planned on exiting again if we got off dollar testing the resistance level. And at that time, Walmart had made I made a note that Walmart had made a comment about currency fluctuations starting to affect their overseas sales. So if the biggest part of the United States economy is making noise about how the currency fluctuations are bothering them, then you never know. You could probably see some kind of a sell-off in the dollar. Okay, so moving on, we did manage to go up and top out again between 112 and 117 for a while, and then actually break out to the upside again. So we're moving higher still at around the middle of November. And then this is another one of those currencies that, again, collapsed. It made a top here between 117 or 118 and 122 or so. And I make note here, possible new leg up if price closes above the upper line, but a stage 3 top if we break out to the downside. And then once we did close below here, we came all the way back down to the 105 level, the origin of the move, and we found a little support at that time. So these were some wild moves in this currencies. If you were trading them, I'm sure you saw them like I did. I'm sure you've had people on here, Steve, that said they've never seen anything like this before. People that have been trading currencies a lot longer than me. They have been some spectacular moves and very, very quick.
Absolutely.
So I noticed here that we actually moved into this 118, 122 range during November and December and then completed the stage 4 cycle. The sell-off ended when the dollar hit that the origin of the move near 105.50. And so now I'm watching this 118 level for resistance, old support, new resistance. And here we are now on 210. We're sitting right below this 118 level, and we're basing. And again, you currency traders that are using options, this is the worst thing in the world for you if you're holding call options. You need vertical movement. You don't need horizontal movement, so you need to pay attention to these supply and demand levels as they form, or resistance and support levels, so that you're not buying calls right before the volatility and the time come out of them. We did make one shot up at that 118 level, and that week that we hit the level, we closed the week on the low of the week. So we did make a shot up there, and if I'm not mistaken, we're actually making another candle to go take another stab at it. But that's what I mean. Now you've got 1, 2, 3, 4, 5, 6 weeks where we haven't gone anywhere. And if you're holding calls, your position is starting to really erode. Okay, and when you get down to that daily chart here, we still got another resistance higher on a daily chart at around 119.50. So the worst thing that could possibly happen is we could break out and make new highs and get everybody all interested in buying the calls right into the meat of this. Okay, here's another resistance level on the daily chart. So be really careful here. This could be where the dollar tops out. First of all, the dollar index still has resistance above the 88 resistance that it's challenging, and the euro, the spot euro, has some support about 121.50 too. So it could be the perfect storm. So if we do rally into the weekly resistance area near 118, the next resistance is the daily area near 119.50, and that's where I'm warning that price might reverse, might not. But keep an eye on it. Don't ignore it. Okay, this 116 area should become some kind of support, but now the distance between 116 and 119.50 is pretty small for a large time frame trader to trade between. You might want to plan out some kind of a spread. There's plenty of information that Steve's put out here with plenty of guys talking about spreads. So if you want to take this information for possible use to actually plan out a spread, feel free.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.